There has been a lot going on in the stock market recently, like Chinese stocks spiking 40% in just a few days, and all the major tech companies announcing nuclear deals. If you have been following my channel for some time, then you know that I have been saying Chinese stocks are ridiculously cheap for a few months now, and that I have been bullish on nuclear energy for a few years. China's largest companies are cash rich and trading for about 5 times cash flows, which is a 20% free cash flow yield. Insiders were consistently buying shares, the companies announced dividends, and they have been buying back a ton of shares as well. So while there is a very real risk in China, at a 20% free cash flow yield, a lot of that risk was already priced in, and more, at least in my own opinion. In other words, at a 20% free cash flow yield, a lot can go wrong, and you can still make a great return. Now, on the nuclear front, I made a video 3 years ago explaining why nuclear is going to be an absolutely essential asset for the future of the global economy. There's simply no other clean source of energy that can power the base load of our energy grids. So if the world truly wants clean energy, then nuclear is, and always has been, the only option. In the past week, governments around the world have been making major nuclear announcements, and it seems like the global perspective on nuclear is beginning to shift. So in today's video, I want to discuss why Chinese stocks have been so hot lately, all of the news coming out about nuclear, and how I am investing in the future of the nuclear industry. So with that being said, let's hop right into the video, and let's start off with all of the China news. So as I said, Chinese stocks have been going crazy lately, and now Alibaba in specific is up 40.5% on the year versus the S&P 500's year-to-date returns of 21%. So far in 2024, Alibaba is now outperforming the S&P 500 by quite a wide margin. Now, obviously, Alibaba stock is also down massively from its all-time highs, but the stock was looking insanely cheap, under $100, and it looks like the stock is finally responding to how cheap it was recently. So then the question is, why is this happening? And why are Chinese stocks going so insane? Well, there's a few different reasons, so let's discuss them very quickly. This article says, Alibaba stock adds to gains, JD breaks out on latest stimulus reports. China's stimulus, mortgage rate cuts. Among monetary measures announced by the People's Bank of China is a 50 basis point cut in the reserve ratio that determines how much cash banks need to keep on hand. That move should free up $142 billion in liquidity, China's central bank said. A further cut of a quarter point or a half point could come in the fourth quarter, which would free up another $140 billion of liquidity for China's economy. Beijing also said it would cut existing mortgage rates by about a half percentage point. That stands to save Chinese households $21 billion per year in mortgage payments, People's Bank governor has said. Further, the down payment requirements for second homes will be cut to 15% from 25%. So overall, it sounds like China is reducing its interest rates, the amount of money that people need to buy a second home, and the amount of capital that banks need to keep set aside, which is going to free up hundreds of billions of dollars. But that's not all. China has announced even more stimulus is coming. So this says, the latest reported China stimulus measures include unspecified living allowances, cash handouts to the poor ahead of October 1st. Additionally, Shanghai's government plans to give out 500 million won in consumption vouchers for dining, accommodation, cinema, and sporting activities. China's central bank also said it will establish a swap program to make it easier for companies to engage in stock buybacks. Further, Chinese banks will offer a 2.25% interest rate on loans for stock buybacks and for investment firms to increase shareholdings. So basically what China is doing is it is giving its citizens more money to go out and spend within the overall economy. That is another form of stimulus that China is doing. And then on top of that, Chinese banks are giving companies extremely low interest rates loans of 2.25% to go and buy back their shares. This is essentially the Chinese banks giving companies capital to go and reduce their share counts and return that cash to shareholders. Now, I find this interesting for a few different reasons. One, it's obvious that Chinese stocks are extremely cheap right now. So I do actually think that this is kind of like a smart move on the Chinese government and the Chinese banks, because they're essentially loaning out money at 2.25%, and then these companies can go and buy back their stocks at 20% free cash flow yields. And if I were the CEO of Alibaba right now, I would be going and taking on as much 2.25% debt as I possibly could to go and buy back as many shares as I possibly could of my own stock. It's also worth noting that a lot of these Chinese companies are sitting on tens of billions of dollars in cash and generating tens of billions of dollars in free cash flow. So in my opinion, I do think that they can leverage up quite a bit, especially when debt is so cheap. Another reason that I think that this is super interesting is because a lot of people have been saying that China doesn't want its companies to pay dividends and buy back stock or essentially return capital back to these companies' investors and their shareholders. Well, how is that argument even possible to be made at this point when China is literally handing out low interest rate loans for companies to go and buy back their shares? That is what these loans are for. So if China didn't want their companies returning capital to shareholders, then why on earth would they make this type of lending product? So I think that whole argument of the Chinese government doesn't want their businesses to return capital to their investors is false, silly, and doesn't make any freaking sense. How do you explain this? Tell me, how do you explain this? These Chinese arguments, I think, got ridiculous. And I think that the sentiment towards Chinese stocks and the Chinese economy in general also got ridiculous. And the pendulum obviously swung very far in the fear zone for Chinese stocks. And I mean, you don't get 5 times cash flow metrics when everyone is excited about the Chinese economy. You only see those levels of price compression when everyone is extremely bearish on the overall economy of China. And I think that this is finally starting to shift. And I think that people are finally starting to wake up that, hey, maybe China isn't as uninvestable as people think. And maybe the Chinese government is actually, wanting to make the economy and these businesses more attractive to investors. Because as I have been saying for years now, it is in China's government's best interest for their companies to succeed, see their market caps expand, and overall become more more attractive to investors. The Chinese government wants capital flowing into their nation. That is the goal of pretty much every government in the world. So at some point, I was saying on my channel, the Chinese government wants capital to flow into their stocks. They want capital to flow into their businesses, into their economy, and into their investments. So I have been saying that I do think there will be a shift in investor sentiment at some point, and it seems like that shift is finally beginning, and the price ratios of these businesses are finally starting to expand. Now, additionally, Alibaba and NVIDIA also announced a collaboration to advance autonomous driving solutions and computing services. This article then goes on to say, Alibaba Cloud Computing Services Unit and semiconductor powerhouse NVIDIA are collaborating on an artificial intelligence initiative that will enable Chinese automakers to advance the autonomous driving experience for smart vehicle owners. Alibaba Cloud, the digital technology backbone of the e-commerce giant, on Friday announced that collaboration, as it unveiled a large multimodal LMM solution for automotive applications that it co-developed with NVIDIA and startup Banma Network Technology. Alibaba's intelligent cockpit solution provider at the Aspara conference that ran until Saturday. Alibaba owns the South China Morning Post. So basically, Alibaba and NVIDIA announced a partnership to try and push autonomous driving further over in China. So Alibaba is officially getting in bed with NVIDIA, and these two companies are trying to solve autonomous driving in China, which I do think is a great thing for Alibaba as well. Now, the last thing that I want to talk about in relation to China is that David Tepper, who is worth over $20 billion and is said to be one of the best hedge fund managers in the world, says it's time to buy everything China. And he also did this interview where he went on CNBC and talked about everything China. So I want to play this interview for all of you and we can watch it together. But I just need to plug in my headphones really quickly, and so that we don't get any feedback, put on the headphones. And now let's play this interview right here.
Back to China again, just
which I think is the biggest thing that people really have to go and understand it, because it has implications all over in bonds, currencies, and stocks. So we didn't talk about the currencies and bond side.
But just with the stocks themselves, I'm just thinking of your positions. Alibaba was a huge position. You really loaded up in the first quarter. You cut back, I think, in the second quarter. What are you doing now? Did the China moves over the last few days, but just because you were saying in the past you wouldn't go more than 10 or 12%, or the most recent things we've seen are that you have about 12% of Alibaba. Does that mean you put those aside and you would own even more than that?
As I said, the value at risk model is what I sleep at night. I had a fine. I went over that limit on the Fed announcement, okay, in the last week. I went more when they said a day or two ago on their Fed. And last night, I did more.
Just Alibaba, or are you talking
Everything.
JD, Baidu, PDB,
Everything.
the two Chinese ETFs? Everything China.
ETF, I would do futures, right? Everything. Listen, a long time ago, in 2010, I think I said everything.
And you
I remember when you said everything.
And you know what's good?
You were right.
Everything. Okay? So if they, this is incredible stuff for that place, okay? So it's everything. Now, I would love to see a pullback, okay? Because I will then, my newfound limit, which might have been twice my old found limit.
25%?
You said 10 to 12 is double.
20 to 24%. So
I'm not going to say what it is.
Is the limit 25?
I will have another newfound limit, okay, in a pullback, okay, if I see these absolutely be implemented. Because, again, you can look at these names, and you're talking about single-digit PE multiples with double-digit growth.
But you think there's
wait a second. Yeah. This is the other thing. You have some of these stocks with 50% cash. Some of these things you just put up on the board, 50% cash, 20% cash, 30% cash. And that cash, depending how the Chinese currency goes, maybe if the Chinese currency is really strong, they'll want them to buy back.
Okay, so David, let me ask you this.
Did you see this thing? Buying back stock, when companies buy back their stock.
Right, but you're a hedge fund. How do you hedge your risk? What's the counter bet that you put on that, just in case?
You know what? I'm sitting here in a suit. My counter bet is that I don't care.
Okay, so there was a lot that he just said in this interview. There's actually another interview of David Tepper in 2010 when I believe the Fed was lowering interest rates and they were saying that they wanted to stimulate the economy. And he went on CNBC back in 2010 and basically was like, you can buy everything right now. Everything is cheap relative to what the Fed is doing and what they want to do with interest rates and how they want to stimulate the economy. So he went on CNBC in 2010 and said, it's time to buy everything. The recession is over. We're on the recovery. Interest rates are low. Stock valuations are low. It's time to buy everything. And then obviously one of the largest bull markets in the S&P 500 happened over the next 14 years and is still going on today. So now he's coming back on CNBC and he's saying, now is the time to buy everything China. And he was like, I am buying everything, okay? I believe in the most recent quarter, Alibaba was his largest position, around 10%. I don't actually have those exact numbers. I'm just speaking off the top of my head, so I'll fact check myself when I edit this video. But he's also saying that when the Fed announced that they're lowering interest rates, he loaded up more Chinese stocks. And then when the Chinese government came out and said they're lowering interest rates, he loaded up more Chinese stocks. Then he is quoting right here how Chinese banks are now giving Chinese companies low interest rate loans to go and buy back shares as well. That's what he was pointing to on his piece of paper right there. So he is very clearly saying that he is heavily long Chinese stocks now. And remember, this guy is worth over $20 billion, one of the best hedge fund managers in the world. And he's very clearly saying these stocks are ridiculously cheap. They're trading for single-digit price ratios, growing double digits, and they have 50% cash. This is the exact same thing that I have been saying on my channel for so long. Let's go and take a look at Alibaba, for example, which is the Chinese stock that I own. If we go and take a look at April of 2024, we can see that Alibaba's market cap was about $167 billion, and its cash position was $81.6 billion, which is basically 50% of the market cap is sitting in cash. Now, what this means is that the enterprise value to free cash flow of the business, if we just go here, got to a low of 4.19. That is a free cash flow yield of 25%, okay? And this company is still growing its revenues, and it is going to see its profit margins expand once again because the company is kind of going through its year of efficiency right now. And there's an argument that there's even higher quality stocks than Alibaba in the Chinese stock market that were also trading for similar prices with large, ridiculous cash positions. So David Tepper is very clearly saying that he is very long China and he thinks that it's time to buy everything China. And he's basically going all in his hedge fund. And these are the reasons why. This is also at the same time as the US stock markets, at least in my opinion, are extremely overvalued. So I think that there will be this shift eventually where the sentiment towards China starts to shift, multiples kind of compress, and that the capital kind of figures out that equilibrium. Because right now there's so much capital in the US markets and there's so little capital in the Chinese markets. And when you simply take a look at the valuation gap, it's at least clear to me that some of that capital has to flow into Chinese equities at some point because it's getting ridiculous. So that was always my investment thesis on Alibaba, and I'm happy to see that the stock is finally getting some love. But just to be transparent, guys, we got a long way to go. This was a $300 stock at one point, and we're still down 70% from all-time highs. So yeah, the stock is doing well year to date, but boy, again, it's still got a long way to go. And that's kind of my thoughts on everything going on with China. Personally, I still think that these stocks are cheap, and I am still holding Alibaba in my portfolios with no plan on selling it anytime soon. So yeah, that's my opinion on Alibaba. So now let's move on to the nuclear news that has been coming out. And there's been a lot of developments in the nuclear industry. On September 23rd, which was just 3 days ago, 14 major global banks and financial institutions expressed their support for effort to triple nuclear energy by 2050. The article then continues on to say, we're joined by 14 financial institutions who express support for the call to action to triple global nuclear energy capacity by 2050. Abu Dhabi Commercial Bank, Ares Management, Bank of America, Barclays, BNP Paribas, Brookfield, Citi, Credit Agricole CIB, Goldman Sachs, Guggenheim Securities LLC, Morgan Stanley, Rothschild & Co., Segra Capital Management, and Societe Generale. These are all the companies that got together and said that they want to finance and promote the tripling of nuclear energy by 2050. Our collective mission is clear. Nuclear energy is clean energy. And if we are to ensure a livable planet, build secure, sustainable supply chains for clean energy, and bolster prosperity around the world, we need to make sure that nuclear energy does its part. I could not agree more. Then they continue on. New nuclear power is both clean and safe. It is essential that we accelerate the progression of planned projects into plants on the ground, given the huge demand coming down the line for data centers and AI technologies. This will require nuclear companies, plant owners, data centers, and technology companies, together with banks and financial institutions, to collaborate closely. A significant increase in demand for clean electrons for data centers and AI, with global power demand for this sector alone set to double by 2026. So the global demand for clean energy for just AI and data centers is projected to double by 2026. And this is because of simply how much these mega tech companies are investing into capital expenditures to grow their data center capacity and their AI capacity. This is causing a massive demand for clean energy. And these companies are waking up that the only way that they can create this much clean energy, the demand that they need, is nuclear. There's really no other option for these massive 1 gigawatt plus data centers to be powered by clean energy. It's got to be nuclear. And these companies are finally waking up to that. And it seems like the world is starting to wake up to that as well. Continuing on, this says, it is clear that not only is nuclear energy viewed as a crucial enabler to decarbonize the power sector, but it also fits the profile for sustainable and transition financing, especially as we now see multiple nuclear plants being delivered efficiently, providing confidence to the market and a clear market signal that nuclear is a proven, bankable route to energy security and net zero in parallel. Let's freaking go. It's finally happening. At least it looks like it's finally happening. Now, moving on to what the major tech company CEOs are saying. So Google CEO, we're working on a 1 gigawatt data center, seeing money going into SMRs, which are small modular reactors, which are small nuclear reactors. Pichai also mentioned small modular reactors, SMRs, as a potential energy source, but did not confirm whether Google was planning on using any. Then he continues on and said, I see an amount of money going into SMR for nuclear energy. When I look at the capital and innovation going into new energy, I'm optimistic on the medium to long term. Then on September 20th, this came out. 3 Mile Island nuclear power plant to return as Microsoft signs a 20-year, 835 megawatt AI data center PPA. Microsoft plans to take up 100% of the revived 3 Mile Island nuclear power plant to fuel its AI data center ambitions. So Microsoft is now firing back up a nuclear reactor solely to power its AI and data centers. And this is just the beginning, in my opinion. Earlier in 2024, Amazon also bought a nuclear-powered data center from Talon. So like always, Amazon has been a little bit ahead of the curve, and they have already began buying nuclear-powered data centers for AWS. Now, this next screenshot is from Brookfield's most recent letter to shareholders, which was written by Bruce Flatt, and I'm going to read the underlined segments here. The next 20 years will be an unprecedented period for electricity buildout. The electrification of industrial capacity, automobiles, heating for houses, and other uses is driving unprecedented growth and demand for electricity. On top of that, the world is adding data centers for AI and cloud computing at a stunning pace. To put this in perspective, the global installed capacity for electricity is approximately 8,000 gigawatts. To meet the expected demand, this installed capacity will need to expand to more than 20,000 gigawatts in the next 20 years. Given the above demands, our scale must increase dramatically to meet the needs of our customers. Then Bruce continues on by writing, "We are therefore highly focused on advancing micro and small-sized nuclear reactor batteries, 5 megawatts to 300 megawatts, through our Westinghouse business for delivery later this decade. Our micro and small-sized units are the most advanced of any. As a result, we have an enormous head start and are working hard to achieve commercialization of these units. This will be a real game changer when we get there." So for those of you who may not know, Brookfield owns Westinghouse, which is currently the market leader in SMR technology. Westinghouse is currently working with governments around the world to approve their SMR reactors and get them operational by the end of this decade. And you know what? I have a lot of screenshots here to share with you. Westinghouse and Bechtel welcome investment in Poland's first nuclear power plant. This came out 3 days ago. In this article, it says, Poland's selection of Westinghouse and Bechtel, two gold standard American companies, to advance the country's civil nuclear power program brings energy security to the core of our collaboration. With the AP1000 design, Poland has selected the most advanced, proven technology, already setting operational records in 6 operational units, with another 12 planned to operate before the end of the decade. Now, for those of you who may not know, the AP1000 is owned by Westinghouse, and it is currently the most advanced nuclear technology in the market. Then they continue on and say, the AP1000 reactor is the only Generation 3 Plus reactor with fully passive safety systems, modular construction design, and the smallest footprint per megawatt on the market. AP1000 technology has been selected for the nuclear energy programs in Poland, Ukraine, and Bulgaria, and is also under consideration at multiple other sites in Central and Eastern Europe, the United Kingdom, India, and North America. On September 10th, this article came out as well. Westinghouse and Hyundai team for AP1000 opportunities in Sweden and Finland. Westinghouse will provide the design and development of its industry-leading, globally deployed AP1000 technology, and Hyundai Engineering and Construction will provide its globally recognized industrial engineering and construction services for the project. Then on August 29th, this came out. Westinghouse welcomes the approval of 4 new AP1000 technology-based reactors in China. Westinghouse Electric Company congratulates China's State Power Investment Corporation and China General Nuclear Power Corporation for receiving approval from China's State Council to add 4 AP1000 technology-based plants to their growing list of new build projects. This brings the total number of operational and approved reactors in China based on the AP1000 technology to 16. Westinghouse AP1000 technology continues to be recognized for its record-breaking operational and availability performance through successful deployments in China and in the US. So Westinghouse just got approved for 4 new AP1000 technology-based reactors in China as well. Now on September 25th, Westinghouse AP300 SMR down-selected by Great Britain nuclear for final round of UK new build program. The AP300 small reactor has been down-selected for the final phase of Great British Nuclear Reactor competitive SMR technology selection process. So Westinghouse's SMRs are in the final phase of approval over in the UK to finally start building these small modular reactors in the country as well. And this is a pretty big deal because then Westinghouse will officially be building SMRs in the UK. And then I think that it will be like a cascading effect where these SMRs get approved around the world as well and start being developed and built around the world. So there has been a lot of news coming out in the nuclear industry over the past couple of weeks now. And this is all amazing because, as I said, I have been a bull on nuclear for over 3 years now, and I will put my old nuclear video link in the description for you guys to check out because it's my whole investment thesis in nuclear, and Brookfield is the horse that I chose because they do own Westinghouse, which in my opinion is the most important nuclear company in the world right now. So if this momentum continues in the nuclear industry, then I do think that Brookfield will benefit tremendously. And I do think that this is why Brookfield stock is continuing to make all-time highs with all of the recent nuclear news that has been coming out. But with all that being said, those are the major updates that I wanted to share with you all on my channel for today. And if you did enjoy this video, then please remember to leave a like on it, as it does really help out my channel. And if you're new here and you want to stick around and see more stock market related content and research like this, then please consider subscribing to my channel as well. But that is going to wrap up the video for today, everyone. So as always, thank you so much for tuning in, and I really hope to see you all again in my next video.